Hi everyone, welcome to this week's market commentary. In this week's commentary we'll have a brief look at the Dow Gold Cable, and then I'm going to run through Aussie versus CAD, which is one of the trades that I've had in November. Now I hope you've had a good November. For us it's been really good. We've had some really good setups. It has been a little bit choppier in November, but there's still been some good trades out there, and I'm going to illustrate one of those trades to you, which some of the members took. Ali took, I took it, and it's done some good points for us. As well as some other trades that have come out. So it's been a really good month. Now just to start off, we'll go through the analysis of those three markets before I go into the trade. What we've got with the Dow that you can see on my screen here is you can see we've had pretty much a flat week, and it's not surprising considering it was Thanksgiving, which basically America shuts down Thursday, and it was only open a half day on the Friday, so volume is very mild. So you can just see at the moment we have been drifting up, but it's just not been very clean from a swing perspective. One of the other issues we have with the Dow is we don't really have resistance levels yet, and for me personally I think the short term shorts would be a little bit better as an option when you look at the Dow. When you just look at this little trend line here, if we can actually break the lows of this minor consolidation, it could be that there's a little bit of a move back down to this level. Now, as I've highlighted in other commentaries, though, there is a little bit of a contradiction there, because if we look for instance at the S&P, what we notice is the S&P has actually been trending a little bit cleaner. And you can just see again, we've created that consolidation from a quieter week, and it might be that we want to pop down, but it is trending quite nicely, especially it looks cleaner because we've had one high pullback, another high pullback, and then we're drifting, but drifting on a week of holiday. So at this moment in time, I would say if we can break these trend lines on the Dow and the S&P, the short does look quite good, and there is a bit of space. The S&P, it's a bit sooner before we hit levels here, and then obviously we have the subsequent levels, whereas on the Dow we've got the cleaner air, but it might be the S&P holds this up from actually being able to roll over. And obviously from there, if we can take out these highs, we'll see where we go. But when you just look at the moves that we've had, we do look like we're due a correction of sorts. The only problem we have is December is notoriously a bullish month based on the so-called Santa rally, so that's something to watch out for. Okay, now going into gold, I just wanted to just briefly cover gold because this is one we have been watching. Now there's not too much to report. Last week there was not a great deal going on. We did try and have a push down and it's not really worked out, but on the same token we've not been able to sustain a move up either. So we're rocking a hard place at the moment. I still believe now we have broken this level here. Now, because we've not sustained that move down, I don't trust the bears at this moment in time, and if we can break above this level, I would definitely consider the long. However, if we start to come down and break these lows, we do have some space before the next levels here and here. So I would keep an eye. As far as the swing trading perspective goes, I would definitely want it to come down further, and when I just look across, if I take these highs, what could be a good opportunity from a swing point of view is if price was to make it down to about here, we could possibly consider a long, and alternatively, if we can get there, then it might be there's an opportunity to look short as well. So I would be looking at, and we'll cover that over the coming weeks and see what happens. Lastly, before I go into the trade, it's just cable. I've been discussing cable, and obviously cable came up to this area here and started to press down, but one of the things I highlighted was the fact that it was a couple of times we had come up to this level, so I was definitely looking more likely that we were potentially going to go higher, which is what I preferred rather than the short. And it's because we'd already hit this level a couple of times, and it's that sort of it hits it, and then is it going to go? So from here, if you were actually to break it down, you can see that there's probably been some good moves and opportunities from an intraday point of view, where it might be some breakouts, some pullbacks, and that's certainly something worth looking at. So for instance, if you go to a 5 minute and look at when we broke out, which was here, you can just see that on that day we had this lovely move up, pull back, and then we came up, put in a lovely double top, came back down to this level, and from there we actually started going up again. So you can see that even on the 5 minute there are opportunities, and obviously with the swing there is the upside potential there. And if we can start to break through here or potentially pull back, that could present some swing opportunity as well, so it's definitely worth watching. Now, just to finish this week's commentary, one of the trades that we sent out as part of the signal service that we offer, or potential trades, it's not, we don't say we're definitely taking them, it's just points of interest in markets we are considering, was Aussie versus CAD this month. Now, when you look at it off the daily, there isn't actually too much to see. All you see is this market moving up. But what we know from our analysis, and I'll show you how and why in a moment, is this area around about here is a really, really strong area of resistance. And this is simple technical analysis from the perspective that if we come into a resistance, it's a fantastic area to consider a trade, whether it be to go short or eventually to go long. And you'll notice that once we come into this area, it takes a little while before we turn, but when we turn, we've now been doing a nice trend down, and from this I've been able to take a nice few hundred points. Now, how I can show how this lined up even cleaner, if I go to the weekly, all of a sudden you should be able to see straight away the levels I've highlighted. We've got these levels in here up to about here, I would say, just give or take. We've got the two moving averages, which is the 200 and the 50, and also you'll notice if I use a little bit of Fibonacci, bring this in, lovely 50% Fibonacci right there. Absolutely beautiful. Now what you'll notice is we're sitting on the 21 now with a lovely reversal candle, so it does look like we could be due some upside, which statistically speaking looks good because we've been moving down for the last 4 weeks, so I would definitely be looking out for a little bit of upside. Now, I took my profit and closed this out about 9,650. I did it in 2 lots, so basically I let the market break back down below 9,900. That's where I get in my first lot. So if I take you to the 1 hour and then we take it back, what you'll see is from this stage here, when we broke back through, you can just see it went a bit sideways and then it broke down, and when it went into this sideways movement, that was telling me the market's running out of momentum. So I closed my position at that point, so I was able to capture at that stage about 110, 120 points. Then I put a re-entry back at these levels here, which was, in fact it wasn't that high, it was in here, so it was about 9825 is where I got back in, which was here. Then my stop was back up above those levels there, and I've played it back down to the 9,650 level. So again, I've been able to take another 100 and what's that, 200 points roughly, not quite. So I've been able to take quite a bit out of this trade, really clean trade. Now, the strategy that this met, you wouldn't take as much, but because of the discretion that we teach and that I go through with people, I've been able to capture a good bit more, and it's because I've had the weekly to back me up. So normally I might not look for as much. The other reason why I look to get out where I get out overall is, you notice where we come back here is the 50% Fibonacci. If I do the opposite of this move up on the daily, you'll also notice that's exactly where we've come back to on the daily, which is the 50% fib, which we've also got a little bit of price action in and around there. It's not the strongest area, but that was the clue, and obviously that alone gave me a phenomenal risk to reward, which meant that rather than trying to be greedy and necessarily try to get it all the way down to the bottom, that was certainly enough for me. Now the next stage with this one, which would be worth keeping your eye on, is where do we go from here? So the weekly starting to tell us that the upside is on the table. And this is where I can use a little bit of reverse psychology. If that's starting to tell me to go long, it means that anyone that does go long, their stop losses are more likely to be under here. So what I'll look at is to see if we can consolidate and then a potential short, because I know I've then got the space down to these levels here with a stop in this region. So again, the risk to reward looks quite good. So I'm just watching this at the moment to see if it presents a subsequent opportunity, but we'll see what happens. So that's us for this week's market commentary. It's a little bit longer, but I just wanted to show you that trade as well as just update you on some of the markets, and I look forward to seeing you in the next one. Bye for now.